Today on the Gold Standard.
The 40-year rally in bonds and low interest rates, sometimes even negative, is over, folks. And we need to have more awareness and more safety and more defense than ever because the risks are that high. Whenever you have a market and a situation concerning our money where the risks are so high, where so many things could go wrong. Look at all of the things out there that can go wrong and how many things are actually going to go right.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Dino. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Hey, Ken, it's a pleasure to join you again this week.
Nice to be with you as always, Dave.
Our topic is the recession is robbing you. So, Ken, let's begin at the very basic definition of a recession. How is it defined?
Well, Dave, a recession is a period of economic contraction. Recessions are typically accompanied by a falling stock market, a rise in unemployment, a drop in income and consumer spending, and also an increase in business failures.
Ken, there have been a lot of competing messages in the media as to whether we are in a recession. Generally, politicians say we are not, but more and more economists are saying that we are or will soon be in a recession. What does your information say?
Well, Dave, who knows, right? But I know we're in a bubble, and I know that bubble is popping because this bubble has been made and developed over the last, especially 15 years, by printing unlimited amounts of money out of thin air, trillions and trillions of dollars. So we're in a fake economy, we're in a fake market, we're in another bubble. And the stock market last year in 2022, Dave, was one of the worst years for Wall Street since 2008. And we have a lot more to go, folks. We're not anywhere near cleaning this up after 15, 20 years of just unlimited money printing. How could we be done just in a few months or even a year? So we all know how disastrous that was when stocks and bonds, Dave, fall together. A lot of clients are calling that they want to stop the bleeding in their accounts, or they can't understand what's going on in their IRAs or their old 401ks that were doing so well, and now all of a sudden they're not. Well, nothing goes up forever, right, Dave? And the economists are predicting actually another 20% drop in 2023. And what I find very interesting, Dave, is during the last two severe recessions that we've had, the stock market dropped close to 60%.
Wow.
So we have a lot more to go. We have a lot more bottoms to go. There's a trap going on right now where things are bouncing a little bit, and some of these names are bouncing back that are down 70 or 80%. And that doesn't mean we're out of the woods. So I would urge people, Dave, to be in safety mode. I would urge them to be protecting whatever they can. I would urge them to not believe all of these things that are going on, and they're being labeled just as glitches. We had a glitch in the stock market recently, and they had no idea what was going on. We had a glitch in the Bank of America where people woke up a couple weeks ago, and a lot of clients, their accounts at zero because there was a Zelle glitch. Things are falling apart. Whether you want to call it a recession or not, that's fine. That's a definition. I would just say the bubble's bursting, and it's up to us to protect whatever we can. And that's where gold comes in, Dave. That's where taking money out of paper comes in. That's where understanding that our dollar is being devalued. They are ripping us off. They're ripping us off through inflation. They're ripping us off through devaluing our dollar, and they're ripping us off through taxes.
Wow. Let's take a look at some very worrisome facts, and these have to do with the job market. Google's CEO just announced 12,000 layoffs. That's Google. Microsoft is reducing their workforce by 10,000 jobs. The Washington Post newspaper is reducing their workforce by 2,500 jobs. Facebook, Meta, told employees that they are letting 11,000 people go. And Amazon, the biggest retailer, you might say, in the world, just announced 18,000 job cuts. What do you make of all this?
Well, and we have to understand where we're at, right, Dave, too, where there's $31 trillion worth of debt right now, right? Do you know how long it would take to count to 31.4 trillion?
No.
995,000 years.
I can't live that long.
That's how big of a number this is. So, I mean, we're on top of all of this, but the numbers out there are just outrageous. But these are major job cuts by some of our most successful companies. These are the companies that their stocks were carrying all of these gains in NASDAQ over the last 10 years. Now, these are the companies that all of a sudden are laying off thousands of people. This is the same pattern, Dave, that's being repeated nationwide by companies, both big and small. So how could we be in something that's healthy? This is not healthy. So we'll have to see how it all plays out. But like I said, the bubble is bursting. You and I were talking about this close to 2 years ago about how we're going to have an implosion of debt, and all the assets behind that debt is going to come down significantly in value. And that also means stock prices. So even though the administration is trying to say that they have unemployment under control, they have inflation is just transitory, we're going to see joblessness increasing, which in turn will create a definite slowdown in our economy. We've seen it before, Dave. When consumers get unsettled about inflation and the stability of their income, they stop buying. And the problem is this. In previous recessions, what did the Federal Reserve do to fight the recession? They printed money and lowered interest rates, right, Dave? We're raising interest rates now to fight inflation. It's the total opposite. So like we talked about, the 40-year rally in bonds and low interest rates, sometimes even negative, is over, folks. And we need to have more awareness and more safety and more defense than ever, because the risks are that high. Whenever you have a market and a situation concerning our money where the risks are so high, where so many things could go wrong, look at all of the things out there that can go wrong and how many things are actually going to go right. So these are the things that we have to protect ourselves against, and we have to protect our money. And that's why it makes a lot of sense, Dave, to take a significant portion of your paper assets right now and say to yourself, would it be much better off in my own possession, in gold and in silver, rather than wrapped up in paper in the markets or the banking system? And our argument would be definitely so.
A reminder here that you're listening to The Gold Standard with Ken Russo from Midas Gold Group, and our topic today is The Recession is Robbing You. Hey, Ken, what does a recession do to our personal wealth, to the value of our cash reserves or investments?
Well, it crushes them. Like I said, they're robbing our money through taxes, inflation, and devaluing our money. Inflation is the devaluing of our money. If you print trillions and trillions and trillions of something out of thin air and you grow the supply massively, like 40-50% in a year or two period, which is what we've seen over the last couple of years, and they blamed it on a pandemic. They blamed it on Putin. It's not the pandemic's fault. It's not Putin's fault. It's a system, Dave, that's on fumes because of the abuse by our central bankers and our politicians to just print money like drunken sailors and to spend money. I mean, we just spent another close to $2 trillion just a month or so ago before Christmas, where a 4,000-page bill was passed, close to $2 trillion. And who knows what's in that bill? Nobody read it. And it's just money that we don't have. So that's not stopping. The machine is not stopping. And the problem is, Dave, is that our dollar continues to buy less and less and less. And unfortunately, who knows 5 or 10 years from now what our money's going to be worth at all. It may just disappear. Who knows? But the buying power for sure in our paper money is going to go down. So what could we do to support ourselves and to keep our savings and to keep our nest egg intact? That would mean taking some of our paper, Dave, and moving it today into gold and silver.
Ken, you have stated time and time again that gold provides a hedge against inflation and a recession. How does that work?
Well, that's one thing it does, Dave. When the financial system fails and when our dollar potentially fails or just buys a lot less in the future, it could crash. I mean, it almost seems to me like the system will crash and our currency will crash. You need something that will make up for that. Now, don't forget, gold has been money all the way back to the Roman Empire. You and I have talked about that
Mm-hmm.
before, and
Mm-hmm.
silver's been a part of the monetary system as well. So
Mm-hmm.
you need something that is a store of value. You need something that is tangible, something you could hold on to outside of the system. Because when things fall apart, Dave, and when the system crashes and when our money is, significantly devalued, because we all know they're going to print a whole lot more money. We all know they're going to spend a whole lot more. The whole system depends on it. They're going to keep doing that until the whole thing crashes. You need something to protect your buying power, something to protect your nest egg. It's your safety net. And gold and silver, especially gold, has filled that capacity forever. Gold is the only form of real money that's ever existed, Dave. It's the only form of something that will always have value. It's liquid. It can be barterable. It's been money for thousands of years. I don't know how much clearer we can be than that.
We're going to continue our topic, The Recession is Robbing You, a little bit later in the program, and we'll highlight several tangible ways to convert your wealth into the security of gold, as Ken has been urging you to do. But first, a reminder that you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And coming up, we're going to take a look at a specific precious metal that you can use to safeguard your wealth. And that's coming up right after this.
At the start of 2022, you could invest in almost anything and make money. The stock market was still growing, real estate was high, and cryptocurrency was the rage. What a difference a year makes. 2023 is going to be a year of economic upheaval, according to many economists. Sebastian Gorka here. The Biden regime is pressing ahead with its leftist agenda, ignoring the growing signs of a recession. But many economists are warning of massive layoffs and huge stock market losses, which is why I recommend calling Midas Gold Group to safeguard your wealth with the stability of gold while you can. Gold holds its value when economies fail, guarding against the ravages of inflation and the ruin of a recession. Talk with veteran-owned Midas Gold Group. Go to MidasGoldGroup.com, or better yet, call 855-322-GOLD, 855-322-GOLD. It's gold you can hold. Call now, 855-322-GOLD.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino, and our topic today is The Recession is Robbing You. By the way, if you live in the Los Angeles or Phoenix area, you can come and visit our local office to meet with us in person, eye to eye. For the address and directions, just log on our website, MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Now, it's time for our precious metal spotlight of the week, and today, the Gold Vienna Philharmonic. And Ken, on the MidasGoldGroup.com website, you described this as perhaps the most successful investment coin on the market. That's quite a description. Why is that?
Well, I mean, it has a reputation of being a great product for a long time, Dave. Not as many people know about it as, say, like, an eagle or a buffalo or a maple leaf. So it's kind of under the radar a little bit, but very, very successful, especially for investors in Europe. But for people that are looking for wealth preservation and they're looking for a product that will give them the benefits of gold, the Gold Vienna Philharmonic is available again. May not be for long. If the market is any indication of what's going on, we've seen statistics from the World Gold Council lately, Dave, indicate that this coin was the best-selling coin in the world in the early 90s, the late 90s, 92, 95, 96, and actually in 2000. So a little bit under the radar the last 20 years or so, but definitely making a comeback. And it's due to some pretty basic characteristics, Dave. It's a 24 karat gold coin. It's backed by the Austrian Mint, which has a tremendous reputation, very reliable mint, make great products. The Philharmonic also comes in silver and platinum as well, and it also comes in small denominations when it comes to the gold coins, but they're very hard to get. But like I said, Dave, the Vienna Philharmonic is one of the more rare and truly classic bullion coins that simply just never goes out of style. It has a real style of all of its own, Dave. It's more of a wafer-like coin. It's a little bit wider and thinner than some of the other coins. So it actually has a very unique, stunning appearance.
Maybe you can describe for us in a word picture about that appearance of the coin as you're holding it there?
Yeah, well, the obverse or the head side, Dave, of the coin depicts an iconic pipe organ from the concert hall in Vienna that is the home of the famous Vienna Philharmonic. And the reverse side of the coin sports a bouquet arrangement of classical instruments like the violin, cello, bassoon, and harp in a very nice, crisp detail. Very, very beautiful portrayal of those instruments. And an interesting fact, Dave, of history about this pure gold coin, despite this early success, the coin could have easily have never been struck in the first place. It took a change in Austrian law, which newly legalized the circulation of pure gold coins in the open market to lead to the minting of this new historic coin. Very similar to how the gold eagle was introduced all the way back in 1985 as well, Dave.
And the gold Vienna Philharmonic coin, is it eligible for an IRA account?
It is, Dave. It's eligible for an IRA. It's eligible for possession yourself if you have some liquid money in a bank account. If you have some liquid stocks that maybe you're thinking about getting out of, you could convert those funds by check or bank wire, and we'll send you some gold Vienna Philharmonics right to your residence or right to your business where you could hold on to them and keep them safe in your own possession. And that's what's very, very important, Dave. And as always, Midas Gold Group is more than happy to advise prospective buyers on whether this coin is right for them, right for their portfolio. If it's a right kind of gold that will give them the benefits of gold for safety, if it will be a nice addition to their gold hoard. And we would just encourage people to learn about the different products today. As time is running out, we may not have the ability to move our money around the banking system or whatever privately for much longer, and we would urge people to make some decisions, some tough decisions right now, but some very smart decisions to get some paper out of the system, to get some investments out of mutual funds and bonds. We're not financial advisors. We're not giving financial advice, but anybody who understands the writing is on the wall, anybody who is being realistic understands that this is not going to end well when it comes to our financial system. It would make a lot of sense, Dave, to convert some of our assets today. And one of the products that you can convert it to is the gold 1 ounce Vienna Philharmonic.
Good guidance, Ken. Thank you so much. Coming up in a moment, we will continue our topic, The Recession is Robbing You, with Ken Russo from Midas Gold Group. And that's coming up right after this.
Looking ahead, you don't want to get several months into the year and say, I wish I could have, after a stock market meltdown. Sebastian Gorka here. Start the year protecting your cash reserves and investments with the stability of gold from Midas Gold Group. Talk with them about your safeguarding your wealth. Gold holds its value when economies fail. Go to MidasGoldGroup.com or better yet, call 855-322-GOLD. It's gold you can hold. 855-322-GOLD.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Dino. Our topic today is The Recession is Robbing You. As we have been saying, if you live in the Los Angeles or Phoenix area, we encourage you to come and visit us at our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. And for those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD, by the numbers 855-322-4653. Now, let's get back to our topic. Ken, for those who are hoping that the inflation that is fueling our recession will subside and the prices will drop, you have a new article that illustrates how that is just not going to happen. Tell us about it.
Well, Dave, historically, when prices rise because of inflation, or more importantly, because of the devaluation of our paper money, they never drop back down to pre-inflation levels.
Mm-hmm.
Never, Dave. We've talked about this. That is why the US dollar today is worth 14 cents compared to 1971 when President Nixon took us totally off of the gold standard and our money became Federal Reserve notes. Just look at your paper dollars in your pocket, people. It says Federal Reserve note right on it. Inflation, at best, Dave, is 3 steps forward and 1 or 2 steps back. I mean, at best. And I'll give you a real life example of that from an article I read this week. It's not inflation anymore, Dave. It's price gouging. A major retailer shopper buys the same exact amount of groceries 2 years later and spends 50% more. That was the name of the article. One shopper went to the grocery store at the end of 2020 and purchased a cartload of groceries for $10.09. She said at the beginning of 2022, there was a lot of talk about inflation at the grocery store. So she decided to go back and purchase all of the same things. And her total bill was about 10% more. Now, at the start of 2023, she went back and purchased all the same items. And the catch, her groceries now cost $15.10, which, believe it or not, Dave, is a 50% increase, 50% more than the prices were at the end of 2020.
Wow.
So it's just a blatant example of inflation is never going to drop back to where prices were 2, 3, 4, 5 years ago. Never. The point is our paper dollar, our fiat dollar that's backed by nothing, is continuously devalued. It's not inflation anymore, Dave. It's price gouging. Once prices go up, they never, ever come back down. Not anywhere near close to their original level. The fact of the matter, Dave, is life is just going to be more expensive in all facets from now on.
Ken, one last question, and it's one that I've asked you before, but I want our listeners to hear your answer again. How can I have confidence in the value of gold?
Well, I mean, this is what it does, Dave. I mean, its role, I mean, even back in the last recession of 2008, gold was around $800 an ounce, and 2 to 3 years later, it was at $1,900 because it reflected all of the money that was being printed. It represents the amount of buying power that our paper dollar loses. Remember, folks, it used to take $35 back in the 70s to own an ounce of gold. Now it takes over $2,000 to own an ounce of gold. It's not because the gold is just so much better or anything like that. It's just that our paper money continues to be devalued. Our paper money continues to buy less and less and less. And the relationship, Dave, is as paper assets lose buying power, as our money loses buying power and loses worth, the price of gold reflects that at a much higher price. And I don't see any reason in the world why that won't continue. I actually think that gold should be $5,000, $10,000 sometime in the future. Who knows how long it's going to take for all of this to play out, but I have no doubt in the future that our paper money is going to be worth a lot less 5 or 10 years from now, and I have no doubt that the price of gold will reflect that at a much higher level per ounce.
And that is going to bring us to the end of our time together here today on The Gold Standard with Ken Russo, brought to you by Midas Gold Group. A reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD, 855-322-GOLD. Hey, Ken, thank you for your time again today.
Well, thank you for your time, Dave.
I'm Dave Dino. Come and join us again next week at this same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.